Good morning. I am honored to be announcing this third session of the morning with Tapestry, a New York-based house of modern lifestyle brands, including Coach, Kate Spade, and Stuart Weitzman. Here to discuss the business with me, I have Joanne Crevoiserat and Noam Paransky. Joanne is the CEO of Tapestry, leading the executive committee in Tapestry's overall strategic direction, including the recently announced acceleration program to drive sales and profit growth by transforming the company to a consumer-centric, digital, data-driven, leaner, and more responsive organization. Noam Paransky is the Chief Digital Officer of Tapestry, responsible for leading the company's digital innovation agenda, and he plays a key role as the enterprise leader to deliver an innovative omni-channel experience for all customer digital touchpoints, including websites, marketing, social, and the digital in-store experience. So with those introduction, it's clear that we're going to have a fantastic discussion today focused on the themes of this conference, DTC and digital. Welcome, Noam, welcome, Joanne, and thank you both so much for joining us today.
Thanks, Alex. Great to be here.
Thanks for having us.
It's a pleasure to have you. I'd love to start with a high-level question, a discussion of the acceleration program that you announced in August 2020. This is a multi-year strategy to drive profitable growth across the portfolio, where key components include creating a data-driven organization with a digital-first mindset. So given that's highly relevant to the topics in discussion today, it'd be great if you could walk through the key elements of that program and an update on progress to date.
I'll jump on that, Alex. Thanks. When we talk about the acceleration program, it makes sense, I think, to take a step back. We began the process of putting together the fundamental elements of the acceleration program really pre-pandemic. And it was with the idea to position the company to thrive in what we were calling back then the new world of retail. We saw trends developing with consumers at that time, and that's why we developed the pillars of the program to better meet the needs of our brands and our consumers by first getting really close to the consumer, sharpening our focus on the consumer. As you mentioned, the second pillar is about leveraging data and leading with a digital-first mindset. And the third pillar is around transforming our company into a leaner and more responsive organization. And these are really foundational changes we were making to the business. Now, as you might imagine, the pandemic has only served to accelerate the trends we saw that were happening in the marketplace. They've moved much faster. So it's increased our conviction that the acceleration program and those areas of focus are the right areas of focus for our company. And our performance in the first half, as we've begun to take action behind that program, have really reinforced our confidence in the future and really demonstrate the potential of the program. And if you think about, to bring it right back to the topic of the day, from a digital perspective, we're really meeting consumers where they choose to shop. And we're utilizing marketing capabilities to drive engagement and enhance that customer's digital journey. And again, some of the real proof points in the first half of the year are that, in the last quarter alone, we realized triple-digit growth in our digital business, including growth across all of our brands. So we're seeing it across all of our brands. We're recruiting new customers, over 1.5 million new customers in North America through our digital channels in the second quarter alone. So significant increase versus prior year in new customer acquisition. And that digital business has reached pretty significant scale for us now. That digital business is $1.3 billion business for us. If you look at over just the trailing 12 months, it's more than double where we were a year ago at this time. So when I say trends have accelerated, they have accelerated quite a bit. And we are leaning into those capabilities. And we're deploying data and analytics tools to drive data-driven decision-making across our organization, optimizing marketing, messaging, optimizing assortment planning, promotional levels. We're seeing higher conversion and AUR as a result of some of those decisions. So really excited by the performance we're seeing across digital channels and in different aspects of the business as we lean into these capabilities. And we do think these trends will be sticky. We think they'll be here to stay as consumers adopt different shopping patterns and preferences. So, overall, we're very confident this is a foundation that we can continue to build off and leverage as we drive market share growth going forward.
You mentioned some of that phenomenal digital growth that you've seen during the pandemic, and I'd love to dive a little deeper into the strategy that's driving that. In the second quarter, digital revenues reached 1/3 of the business and almost 50% of North America. Clearly, that could shift in the near term as the environment normalizes. But where do you see the mix of digital versus brick and mortar shifting in perhaps the next 5 to 10 years?
Yeah, the pandemic certainly has shifted or accelerated those trends, as I talked about. There's been a lot of innovation in that space about brand engagement and consumer engagement over even the last 9 months. But having said that, we think stores will still be important. The experience will evolve based on how consumers are engaging with that physical touch point. The answer to the balance between brick and mortar and digital is ultimately in the customer's hands. Ultimately the customer will decide that right balance between digital and physical. And as we think about our digital strategy, we're thinking holistically about it. And we're thinking about it really from the consumer's perspective of how they want to engage with our brands across both digital and physical spaces. And I'll kick it to Noam to talk about our digital strategy more holistically.
Well, thanks, Joanne and Alex. And I'm thrilled to be here discussing Tapestry's digital strategy. We're clearly living in an increasingly digital world where consumer behavior is rapidly evolving, as Joanne said, following the consumer where she's at. So investing in an industry-leading digitally led consumer engagement strategy is critical to our company and our brand success. So we believe our direct-to-consumer model is a tremendous asset and advantage, and we're focused on 3 key areas to drive our digital innovation agenda. First, we're creating the enterprise-wide and importantly scalable platform, and that's comprised of your typical people, process, technology framework. So on the people side, critically bringing in new digital skill sets, expanding our bench strength, investing in retaining and expanding top talent. And on the process side, fundamentally changing the way we work. We changed our operating model by creating a digital center of excellence that partners seamlessly with our brand team. And then, of course, the digital, there's the technology. We're building a global unified framework we'll be launching soon across our brand. And then it's fundamentally about omni. It's about all those touch points. So to be a digital leader, we have to innovate and deliver an omni-channel experience across all of our digital touch points, including the websites, marketing, and social, that's truly integrated into our journey, as well as the digitally enabled in-store experience. Because as Joanne said, stores still matter. They're still fundamentally important to our ecosystem. And then third, maximizing the opportunity in China. About a year and a half ago, we launched our China Next digital initiative. This intersects 2 of our key strategic pillars: digital innovation and growing share with the Chinese consumer. And so through this agenda, we're driving tremendous results in market with 2 of our brands leading the way on Tmall with tremendous performance. And we believe China serves another purpose. From our perspective, the Chinese consumer and the China digital ecosystem is ahead of the rest of the world. And so by competing at an advanced level in this market, we get a preview of coming attractions in the rest of the world. And we're seamlessly spreading those ideas across our team. So overall, there are incredible opportunities ahead here at Tapestry in the digital world. And I'm excited and energized by the strong growth that we're driving across our brands.
You mentioned that the Tapestry e-commerce business is margin accretive. And I'd love to dwell there for a moment because I think it's such a critical piece of the investment case and the outlook for Tapestry going forward. Can you help us to understand how that e-commerce channel is more profitable for Tapestry, why that might differ for Tapestry versus some of the other companies that we look at, and how we should think about those e-commerce margins in the longer term?
Yeah, I appreciate that question, Alex, because I do think our business, we're thrilled with the tailwind that our e-commerce, growing e-commerce penetration presents for our operating margins and growth going forward. Our digital channels do carry higher operating margins than the respective brick and mortar channels, generally given the lower cost structure of the digital business. I would say compared to other retailers, and I know this isn't the case in every business, but compared to other retailers, we have a relatively higher AUR. And we have, because we don't have sized product, a lower overall return rate. So the cost of getting product to consumers as a percentage of the cost of the order, the value of the order, and then any reverse logistics, that may eat up profit in return, we have structurally lower impact from those. So we continue to drive growth in the digital channel. It's not only supports engagement with consumers and being there for them and supports sales top line, but it's a tailwind to operating margin as we move forward. And, I think, despite further investment in the channel, we expect to continue to invest. The relative variability of e-commerce costs means that, we can maintain these profitability levels as we continue to grow the business. So I think the dynamic is a tremendous one for Tapestry's operating model. It supports revenue growth on the top line, but also profit expansion. And we're looking forward to leveraging this as a key enabler to move from, what has been this past year efficiency-led profit growth to one that is market share-driven growth and seeing growth both on the top line, but also operating leverage as we do grow through digital channels.
Fantastic. I think that's a wonderful place to wrap up. So thank you, Tapestry. Thank you, Joanne. Thank you, Noam.
Thank you, Alex.
Thanks for having us.